Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Monday, September 19th. U.S. stock futures are pointing to a sharply lower open on Wall Street, following steep declines in Europe and Asia. Investors may be looking to book some gains from last week's advance. The U.S. market is coming off 5 straight winning sessions, marking its best week since July. But today, the focus seems to be shifting back to Europe and renewed concerns over Greece's ability to meet its fiscal targets. The European Commission, International Monetary Fund, and European Central Bank are withholding the next round of bailout funds until Greece comes up with a workable austerity plan. The Greek finance minister said the government takes full responsibility to implement the agreed program, but warned that Greece shouldn't be the scapegoat to hide the Eurozone's inability to manage the sovereign debt crisis.
As European investors remain focused on that region's debt problems, President Obama is set to unveil his plan to reduce the U.S. federal deficit. It's expected to cut roughly $3 trillion over the next 10 years, on top of the $1 trillion in savings called for under the debt ceiling deal enacted in August. According to the Wall Street Journal, the president's plan includes $1.5 trillion in tax increases, mostly on wealthy individuals and corporations. That part of the plan reportedly will be named the Buffett Rule, after investor Warren Buffett, who has argued that the very rich are not taxed enough. The new plan is unlikely to include any proposals for Social Security reform or an increase in the age of Medicare eligibility. The plan is expected to meet stiff resistance from Republicans, who have argued against raising taxes on anyone.
Taking a look around the asset markets, we're seeing the most movement in currencies. Traders are moving away from the euro amid those concerns about Greece's future and what its problems mean for the rest of the monetary union. Right now, the euro is dropping well below $1.37. The uncertainty is also driving investors into assets traditionally viewed as relatively safe. They're buying U.S. Treasuries, pushing the yield on the benchmark 10-year note back down around 2%. And gold is on the rise as well, now trading at around $1,820 an ounce. But oil prices are moving in the opposite direction, amid fears that the slowing global economy will cut into demand. Right now, crude is dropping nearly $1, now just above $87 a barrel.
On the corporate front, we're keeping an eye on shares of Netflix. They're dropping more than 1% after the company announced that it's separating its DVD rental service and its streaming movie service. DVD rentals will now be moved onto a separate website and rebranded as Quickster. Along with the announcement, CEO Reed Hastings also apologized to customers for how Netflix handled the recent price hike. One big stock winner this morning is Tyco International, surging 8% in the pre-market. The firm announced that it is splitting into 3 separate companies, focused on fire protection, flow control, and security. And finally, we're watching shares of General Motors. They're slightly lower ahead of the bell, after the automaker reached a 4-year deal with the United Auto Workers Union, which includes a signing bonus and improved benefits. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.